After the liquidity crisis, it became apparent to us that there was a need for funding for non-bank lenders. As you know, in the liquidity crisis, funding became very, very scarce, even for us banks, and much scarcer for those that weren't banks. So what we created was a product that these non-bank lenders could use to go about doing their business. So what I mean by that is these are the companies that you'd be familiar with when you're attempting to buy a piece of merchandise. And it could be anything from a motorcycle to a hot tub, it could be cosmetic surgery, it could be an airplane, something that you'd look for financing at the point of sale. So we reasoned that we could provide convenience for the purchaser by providing indirectly point of sale financing. So what we did is we created sort of a electronic warehouse where loans and leases that are originated at the point of sale could be sold to us on a daily or monthly basis in electronic format. So this was very analogous to how we originally started raising deposits using a human interface we called as the broker network. Now we have a human interface, i.e. point of sale finance companies who gather loans and leases or originate loans and leases for us and then sell them to us, let's say daily, monthly, as they're originated. Some people say, well, why would they do that? Well, the reason they do that is as a bank, we have access to very low cost funding. As a regulated financial institution, our cost of funds is very low as compared to non-bank companies. Also, we have a big balance sheet. We can warehouse a lot of loans and leases, whereas small independent financial companies haven't got that capability that a Schedule I bank does. So it's turned out to be a very productive relationship with the 20-odd finance companies that have partnered with us. Now, some people say, well, hey Dave, that looks like a hard right rudder from your low-risk appetite with respect to lending, and we've heard that you've gone decades without a loan loss, and I mean that's surely to come to an end now if you're financing motorcycles and hot tubs and all those type of things. Invariably, some of those people must get into arrears and not pay you back, and that's absolutely true. That would be true, but we put a little twist into the way we do the financing. The folks that deal with us, the partners, put on deposit with us a significant amount of cash so that when inevitably a few loans go into arrears, that our computer system just debits their account and the ownership transfers back to the vendor that sold us the loan or that lease, so they can look after the collection or the dealing with the humans. So we're staying, you might think of it as in the purest sense of what a bank is. We gather deposits through a huge network of deposit brokers, that being our human interface on that side, all throughout Canada. We have virtually nothing to do with the depositors. Their numbers and names in our database. And on the other side of our balance sheet, we're lending to people all throughout Canada, loans and leases, for various items that they've purchased. Like I say, it could be anything. We're saved from having to deal with those somewhat pesky humans at times, in that on both sides of the balance sheet we have interfaces, being our partners, who deal with the humans when it's needed. So we stay sort of, in its purest sense, a bank based 100% on our proprietary technology. That's how it all works. Thankfully, it works extremely well. And this year and years gone by, we've earned the highest spread in the industry, on the lending side in the industry, it's about a 3% spread. So that's the difference from what we pay on deposits to what we're in our loans. And thankfully, we are giving almost nothing back in what they call loan loss provisions, because for the most of the time we don't have loans in arrears or that cause us trouble. So we get to keep the full 3%, as opposed to others that might be earning, say, way less, 200 basis points, but they're giving back 30, 40 in provisions on top of that to deal with the inevitable loan losses. So it's a lovely model. We love it. It's scalable. We've got all kinds of new ideas how to bring some more innovative products to Canada. Some are in the final stages of getting ready for execution.